Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. Oops. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, well, before we get into the good stuff, it seemed like the Consumer Confidence Board released the Consumer Confidence Survey, showed unexpected drop, and since it's expecting a release with big earnings, and be interested to hear the big earnings after hours analysis from Rob, and of course to interact with you all. So thank you for joining us for this live session. And at this moment in time, I'll introduce who we're all here for, a man of the hour, and that's Rob Roy.
Hi, everyone. Welcome to TradeFinder Live. Zach, you sound like you're still a bit under the weather.
Yes, yeah, definitely still dealing with some nasal pressure and congestion, but we're getting there.
All right. Well, here's the screen, everybody. And as you can see from the background, I'm still in the mountains, but back in the Appalachians out of the Smokies. So kind of playing musical chairs with the different mountains here. Lots of pollens everywhere. So I've got a little bit of stuffiness as well, but we'll get through it. So as you take a look at, different from Florida though, but if we take a look at the market, we've got an awful lot to talk about tonight. As Zach mentioned, the Consumer Confidence Survey came out, showed an unexpected drop. It was expected to say the same as last month. The interesting thing about the confidence release is that 13 out of the last 14 months, it's shown that consumers are expecting a recession. So we'll see how that plays out. Big down day today. We'll take a look at the volume in a minute. And then also, as Zach mentioned, there was some big earnings after hours. We'll talk about those as well as we get through the market. So as I said, lots to talk about, so I'm going to get right into it. Taking a look at the SPY, you can see that we did move to the downside today. I actually sent a note out to our subscribers at EWOTrader.com to keep an eye on this. We'll be looking to see what happens with follow through tomorrow. You can see from the moving averages that we did close below the 10-day moving average. And more importantly, I think at this point, as we close below that level, we've been talking about at 410. We've been talking about that level for quite a while. And as long as we stayed above 410, you could go with cautious optimism. Now that we're breaking below it, if we get follow through to the downside tomorrow, then the optimism part goes away. It's proceed with caution. Period, and perhaps a movement to the downside is in order. That will change everything as far as what we'll be looking at for the markets. We have a lot of strangles on. We have strangles on our case study considerations here at TradeFinder, and so that's a good point to be right now, because it doesn't matter if the market goes to the downside when you have strangles. So this move to the downside, we want to see was there volume behind it, and as you can see, there was better than average volume. So the market basically was down all day, kind of accelerated to the downside a bit in the afternoon. Then just before the close, we had a little bit of a bounce before those earnings reports came out. And the interesting thing about the earnings is, this was in the note that I posted to our subscribers, is I thought that would probably hold the key on whether or not we get follow through to the downside tomorrow or not. You can see the 50-day moving average, which is this royal blue line, is not that far away. Could that act as support? Could we move lower and act and bounce off there? But on the earnings reports after hours, we'll bring up some of the charts here tomorrow, is Google reported earnings after hours, and they beat earnings pretty nicely. Not as high of a beat as what they've done in the past, but surprising move to the upside. Google was up big after hours, but then up till right now, it's given back most of the gains. It's still up a little bit. The futures are up a little bit, not as much as you would have thought, because Microsoft released earnings as well, and they also beat earnings. Now they're holding their gains in after hours, and Amazon, who doesn't report yet, but is up on both of those two. The interesting thing is Google says they're going after Amazon in the cloud space. So that's kind of I mean, they mentioned that specifically. So how's that going to play out? But Amazon's earnings are holding. And then the biggest move to the upside after hours, and it's holding as well, is CMG, Chipotle. We talked about that last week or week before when in our insiders meeting that we do on Thursday night. And just seems like everybody loves Chipotle. They're kind of like Tesla. Everybody likes that stock. And big move after hours. So all in all, pretty good news after hours. The futures you would have thought would have been up a lot bigger than they are. In fact, at the exact time that we're talking about, the futures are up 19. So not bad, but maybe not what you would have thought with those big players all to the upside. So we'll see how that plays out tomorrow. But tomorrow's going to be a really important day to see whether or not there's follow through to the downside after this break of both the 10-day moving average and 410. So as I said, lots to talk about. So let's take a look at interest rates. This is a concern as well. I think I mentioned this in the past that I didn't like this downward move here because of the vertical nature of the move. Obviously, bond prices and yields move in inverse proportions. And when prices go down, or excuse me, when yields go down, that means prices are going up. And that's okay if there's a little bit of money moving into the bond market. But when you have these big vertical moves, that means money's piling into the bond market. And where's it coming from? Likely from other sources, just other than balancing out portfolios, et cetera. That's money coming from the equities market into the bond market. And that's where the concern is. You can see this gap down, and we're already right back down here to 34. So if we get follow through to the downside and yields tomorrow, again, likely means money is moving into bonds from the equities market. That won't be a positive moving forward. Now, as you would expect, if there's concern about recessions, et cetera, you would want to watch the dollar. And the dollar acted as you thought it would as well, bouncing to the upside a little bit. We've been talking about the weakening dollar, and the support has been given to the metals. If the dollar starts to rebound, is that going to hurt the metals? We have a bullish SLV trade on for our alert subscribers at EWOTrader.com. The other side of the coin, though, is if we start to get kind of a choppy or down market, will money move into the metals as a safe haven? So you can see there's a little bit of a dichotomy when it comes to the metals. I imagine someone would be asking about SLV or GLD in the Q&A, so I'll save that for later. But as you would have expected, the dollar to the upside with the market down, breaking support levels that everybody's been watching. And with the dollar, we're holding this level here right at 101. Perhaps that's the end of the wave 5 move to the downside. Can it break below that? If it does, that means that the market has corrected itself. We've gotten back above the 10-day moving average and continued to the upside. But if we continue to see downward movement in the markets, I would expect that to support the dollar. It doesn't mean that the dollar is necessarily going to take off and run. But if the wave 5 is done, then you're likely going to get a bounce back to the previous 4 because that's Elliott Wave rules. Wave 5 ends, you go back to the previous 4 if the wave 5 hasn't extended more than 100%, which it clearly hasn't here. Bend it down basically to that fib level. So we had bouncing fib levels here. We went up to the 38.2% level on the wave 4 and basically down to the 38.2% level on the wave 5. So dueling 38.2% fib levels here on the dollar. So that'll be interesting to see what happens there tomorrow. So looking at the rest of the markets, the DIA, as you would imagine, down as well. And the key here is this 340 level. And let's click on the Elliott Wave. There's no Elliott Wave 5 pattern labeled on the SPY or the DIA. So moving lower there now. So really going to be interesting to see tomorrow how the Qs play out. Those big earnings after hours. You can see that we did have a down day. We've been fooling around with this 320 level right at the bottom end of the wave 5 box, and we're already down to the important support level on the Qs at 310. So can Google and Microsoft and Amazon and all the big boys, can they bring it back to the upside for the techs? Perhaps, and a little bit of buoyancy from lower interest rates, but that's only going to be if the rates aren't tanking because money's pouring into the bond market. Again, it could be coming out of the Qs as well. So all kinds of things riding on how the market performs tomorrow. So keep an eye on these levels. and see how they act. And that's going to tell you whether or not the cautious optimism that's gone to caution goes to bearishness. All those things could be answered in tomorrow's trade. Let's take a look at Bitcoin. And could this be giving us a signal of what's going to happen with the metals? Bitcoin did retrace this vertical move, came back playing ping pong here in the tap box in this wave 5 area. You can see this wave 5 extended all the way up to 125%. And back in right now, at the time we're talking, Bitcoin's right around 28,000, so holding in there pretty well. So a pretty nice bounce back to the upside today on Bitcoin. So is that fear? There was a headline this morning that I thought was kind of crazy, talking about how First Republic reported, and obviously some bad news there, and that had renewed fear in the banking sector, and that's why the market was down. I think the market was down because of the consumer confidence survey. I think all the banking stuff is clearly baked into the cake. That's just my opinion. The people in the financial media, they got to try to come up with some sort of taglines on what's going on, why the market's doing what it's doing. But I think that's a tired argument, the banking thing. I don't think there's any renewed fears. Just because First Republic, which we already know the full story there, had some negative news. That doesn't make any sense to me at all, but everybody has their own opinion. That's what makes markets. All right, let's look at some of the international markets, see if some of those are faring a bit better on the back of our down day. And as you would expect, probably not. And there's Australia, big important level here on the Aussie. You're looking at the EWA. We look at the EWA and the XJO on Thursday nights in our insiders meeting. That's for subscribers only. And we have some subscribers that prefer the XJO. So we look at both of those. But for tonight, we just look at the EWA. And you can see that we have the potential of, even though we're still in a qualified 5-wave to the upside pattern, we completed this zigzag that occurred right through here. And now it looks like we have a qualified downward zigzag. So it gets confusing when you have qualified patterns in both directions, but you can see that move to the upside on the EWA went right to the 61.8% fib level. And if we do move lower, and one day doesn't mean anything, if you've been watching these recordings, you know that I'm a big believer in a follow through, a confirmation day. The market does head fakes all the time. We could have a big update tomorrow on the back of these earnings, and everything that we're talking about now as far as the concerns could be put on the back burner, at least for a few days. But when you see two levels like this, you become concerned. But one day, again, doesn't mean anything. We'll be looking for follow through here as well. In fact, on the EWA, I would submit that we probably have to take out this wave 4 level. But if we break through 23 here, we're almost certainly coming down to 22. That's the next area of support, which is also right there where the wave 4 is. So it gets a little dicey then if we have follow through down below that 23 level on the EWA. And we could be looking at an extension of this downward zigzag all the way down to the 20 level, which would be concerning if you're long the Aussie market. So again, do we get follow through tomorrow? That's the key. That's going to be the theme. So looking at the EWC, same type of scenario here. We've been talking about these resistance levels for quite some time here. All the major markets, it seems like we're up near resistance. If we broke above them, then we'd have been off to the races. So far, that hasn't happened. When we look at the 10-day moving average here on the Canadian market, and you can see that we're down below the 10-day moving average just today, though. So one day, and we're almost to the 50-day moving average here. So very similar to our SPY as far as closing below the 10-day moving average and coming near the 50-day moving average. We have a little bit of support not too far away here at 34. If we don't hold 34, then the EWC is highly likely coming down to 32 because that's the next level of support there. So, key levels to watch here as well. Let's see how the INDA is doing. Sometimes it goes against the grain. And of course, we'll want to see what the German market's doing, which has been performing so well. And just as we were bouncing up and looking like on the INDA, maybe we're getting ready to go up and do something. We bounce back down a bit here, and 40 is the level of importance. And that's where we are, right there at 40. If we don't hold 40, there's a little bit of support at 39, but we may very well be coming down to at least test this wave 3 or come down to that wave 5 level to the downside. But at least the INDA is still above the 10-day moving average. That's one of the few markets, domestic or international, that can say that they're still above the 10-day moving average. Let's take a look at Germany with the EWG. We take a look there, and even the German market down on the news, but been a good performer. This nice move to the upside here, and we had this big zigzag pattern right here in the EWG, and we were at the 61.8% level. Looked like maybe we're going to go up to the 100% level, but now we'll see, closing at or just below the 10-day moving average. But if I take this off, you'll be able to see that there's really not a lot of support for the EWG, about a week or so, but nothing going past that other than this one high here that we had back on the 2nd of February. So a little bit of support, not a whole lot here at 29, a lot more support, one tick lower down there at 28. We spent a great deal of time there, a couple months at 28 back in January and February, broke below it, tested it in March, came back, and then finally broke above it there at the end of March and early April. So if we don't hold 29, there's still a chance we could hold 28 on the EWG. So still probably one of the better looking markets, but showing just a bit of weakness there in the EWG as well. So, it's caution is that we've taken the optimism word off. So just simply time to be cautious, time to be smart. Putting on the strangles when the VIX was low, which is what we did, was a very smart thing to do, I think. So there you go. Lots to watch as far as tomorrow. I'll be checking all these charts. So they follow through on all these markets tomorrow. That's what we'll be watching for to see. All right. So taking a look at, I wanted to show you actually a little bit of a educational thing, I think tonight, on an adjustment that we made on an alert that we have for, and this is what our alert page looks like at EWOtrader.com. Every single one of our alerts has a page like this that gives you the what the trade was. So what we did was we closed out the call and we bought a put. So we flipped it basically. And here's why. Look at the chart. And so when you look at this chart, you can see there was the wave 5 move to the upside. Now we still have the tap box up here, which showed a potential higher move, which is why we still had the call on. However, when you look at this, this is a pretty classic ending diagonal. You want the ending diagonals to be in the wave 5, which this is. And then when you look at this pattern here, the wave 5 pattern, each of these waves is comprised of 3 segments. It could take enough time to go through, but it would take the rest of the show to do it. But each one of those has a zigzag in it, every one of these waves. But when you label them here, there's the wave 1. So the rules that you look for here, there's a number of them on an ending diagonal. And right now, this qualifies on every single rule, which is why we look to go to a put instead of a call here. One of them is that wave 2 obviously can't come down to where the start of wave 1 was. Wave 1 has to be the longest wave in an ending diagonal. And when you have wave 4 has to come down from the top of where wave 1 was. So it violates that, which it did. Wave 3 has to be higher than 1, which it was. And wave 5 is likely going to be the shortest wave. When you see this, wave 5 can't be the longest wave. Wave 1 has to be. So when you start looking at all the rules for an ending diagonal, and this is obviously a contracting diagonal, there's expanding ones as well. This is a contracting ending diagonal. That's just about as classic of Elliott Wave patterns as you could ask for. And then you look down here at the DMI, and the ADX has been drifting down. So there's been no strength being shown to this move to the upside. The 2 directional indicators are basically just snaking back and forth, crossing over each other. So no real clear guidance from buyers or sellers who's in control. So it does appear that this move is weakening as it goes to the upside, and perhaps that's the end of it. And so you'll be able to see, I'm showing you this so that you can see the way we do things at EWOtrader.com, and you'll be able to follow along with us and then see if indeed we do move back to the downside. PWR did actually finish lower than that, but that's what the chart looked like at the time the alert went out today, which was a bit earlier in the trading day. So about as classic of an ending diagonal as you could ever ask for. And so I thought maybe we'd throw a little Elliott Wave education in there on some of these patterns, a little more of a complex pattern, a diagonal pattern. When you're looking, you can have beginning diagonals or ending, you can have contracting, expanding, but there's a lot of different rules that go along with it. And so I labeled them all with the Roman numerals there. So anyway, I thought you might find that interesting. There's earnings, as you can see, not too far away. So maybe that has an effect. Perhaps we go a little bit higher on the wave 5. We might have been just a touch early, but with the weakness in the market, it seemed like this was time. And if we go just a little bit higher, we can still add to the position if we need to. So that you might get some interest out of seeing how that alert went out. Taking a look at our case study considerations and the difference with TradeFinder, as you know, we look for case study considerations each and every Tuesday night. We identify considerations and then you're on your own. And at EWO Trader, we send out alerts to our alert subscribers for entries, any adjustments, as you just saw the adjustment on PWR, and then exits as well. So that's the difference. But taking a look at MPR, MPWR is kind of in the same area as PWR, and that's what we were looking at. And then you take a look at this chart, you can see that this one was going sideways, and we're saying as long as we stayed above 460, you could stay long, but we broke that today. And then you can see that we have kind of a descending triangle being formed here. Descending triangle doesn't mean it has to go to the downside. I know a lot of people market that. Descending triangles break lower, ascending triangles break higher. Data doesn't show that. Triangles can break either direction, whether it's ascending, symmetrical, or descending. Any triangle can break either way. Now, we do still have a wave 4 above the 38.2% level, but I think if we have follow through to the downside tomorrow, close that one out or consider going short on that one. But that will be the key to me on whether or not someone would want to continue following along with that one. FFIV is a strangle that we had on, and you can see that's worked out pretty nicely. Big move there to the downside. So we're going to close that one off and say, hey, you're probably getting greedy if you're still in this one. So we're going to take that as a winner. We also had Amazon as a strangle, and that was back on the 7th of March, and looked like we were going to break to the upside, and we had been breaking to the upside nicely. We had a little bit of resistance here at 110. Now, again, after hours, Amazon is up on the back of the earnings report from Google and Microsoft. Can it rebound and come back to the upside? And I think going into earnings, there's two schools of thought here. It's going to get to the point where there might be enough in the calls because of this upward breakout to give yourself a break-even position. And then you could just hold the put as kind of a lottery ticket. If it were to break to the downside, obviously, if it breaks to the upside, you lose profit potential to the upside. But if you have a break-even trade, it might be worth just to hold the put without risk. And if it breaks to the downside, then you gain value there. So it's going to depend on what happens tomorrow. I think as far as whether or not we would consider making any sort of an adjustment with earnings on the horizon there with Amazon. I think at least balancing the deltas tomorrow makes a lot of sense, if not taking one of the legs off. So there you go on Amazon. Adobe, we looked at this one on April 4th to the upside, and it's just gone dead sideways. Nothing really happening there on Adobe. And then Google, looking at that one to the upside as well, broke nicely to the upside, then came back down. And then so can it follow through with its after hours move? But as I said, the big move after hours, a lot of it's been given back since it had its big move to the upside. How's it going to trade tomorrow? I think that has a lot to do with whether you stay in this one or not as well. It has labeled a wave 4 here, so we're in a qualified 5 wave to the upside pattern. So perhaps if Google does move back big to the upside, then back into the profitable area there, and consider what happens in the market in the following days as far as when you take that one off. This is a rare one that didn't do very well at TradeFinder. Our record, if you go back and look at the recordings of past TradeFinders for the years that we've been doing TradeFinder, you see that the record of these case study considerations has been pretty remarkable. This is not going to be one of them. You can see that we did move to the upside right afterwards, and then down here to 290. I don't like REITs, and should have stayed with that. I'm not a big REIT fan. I just don't like them from an Elliott Wave standpoint, but it did look like it was breaking above resistance there at 310, and perhaps had some room to run. Now, in addition to, the interesting thing I think about this dropping like this is the housing report came out and housing sales jumped 10%. So is that the last hurrah for the housing market? That was a surprise to me. That was more of a surprise than the consumer confidence number coming in below expectations. The housing market has just stayed really, really strong. So you would think something like public storage would be doing well, but obviously not so much. So if you wanted to hang in there, because we've already had this drop, 290 would be the level of support. Stay there. If it breaks below that, then you might consider getting out. We still, if you're looking for things to hold on to, have a set of higher lows. So maybe we just needed to come back down and test this support at 290 again. We set a higher low there. I'll see how public storage trades tomorrow. With the housing market, it was up a little bit today, but pretty interesting there. This one may be a loser. We'll give it this 290 level since we're already here. And if not, then we'll have to say, well, we've only had a handful of losers on our, I'll have to go back and look on our case study considerations over the years at on TradeFinder. And then we looked at Eastman Kodak. Boy, that's old school, isn't it? Eastman Chemical. And you can see that there was the strangle set up. And as I said, strangles were a smart thing to do with this market, I think, and it's starting to break to the downside there. See if we get some follow through lower there. Move to the downside would be nice. Markets always move down faster than they move up. So, it's kind of hard to say that when you have strangles on with these triangles, you're rooting for a downside breakout. But the truth is that when they break to the downside, you often make more and you make it faster on the breakout. Sometimes you can get some pretty vertical breaks to the upside, but often it takes a little bit longer. But to the downside, you usually get some really nice breakouts. So closing right there at 80, if it breaks down below that again, it only has just this last little tick here on March 24th to hold it. Otherwise, it could be all the way back down here testing these levels at 70, going back to September and October of last year. And obviously that would make for a really nice return on the strangle. And then O'Reilly, we had this one to the upside. We looked at that last week as well. Pretty nice move, and it's consolidating the move. Still in a wave 3. Really not, really affected too much by the move in the market today. Still above the 10-day moving average. I think you would kind of want to watch 900. Could give way a little bit. We've had this really nice run, so a little bit of a pullback I think would not be out of the ordinary. And it's got support at 860. Now, would you want to wait that long? That would be, a decision you'd have to make on whether or not you'd want to stay long here, or if it closed below the 10-day moving average, just get out and say, hey, I'll wait and look at it again. But status quo for now, consolidating that move it's had, breaking above the 460 level, what was resistance, hopefully becomes support. If it has to come back down, the preference would be that it doesn't come back down, that it goes right up here towards this level without a move lower. However, a move to the downside, has tremendous support at 860. So would you want to just hold it and add to it if it came down there? If it broke the 10-day moving average, that is 40 points to the downside, even though it's a $900 stock. So doesn't quite equate the same way unless you have a big trade on with a decent delta. Otherwise, the delta is probably pretty small on putting on a position on O'Reilly being this expensive. Or if you had a spread on, if it broke lower, then you could take the short side of the spread off. That's an adjustment that can be made with spreads. It's one of the nice things about spreads. When a stock moves against you, you can take one side off. So a lot of different things that you could do with O'Reilly, and certainly just saying, hey, if it breaks below the 10-day moving average, I'm out. Nothing wrong with that either. So would you want to hold 860? Would you want to take it off at the 10-day moving average? I say for now, it's still above the 10-day moving average. I don't see any reason to take it off now, and it's still holding the 900 level. So, we'll see what happens on the next couple of days here on O'Reilly. But that kind of sets things up as far as the past case study considerations that we've looked at here on TradeFinder. Let's see what we can find tonight. Boy, it's going to be interesting to see what we would look at, isn't it? So if we take a look at our pre-computed list, and by the way, if you're wondering, if you're new watching TradeFinder for the first time and trying to figure out what this is profit source from a company called Hub, HUBB.com, is where you can find out more about it. I actually had a couple people on Twitter say, hey, what software is that you're using that was saw our recordings on the Hub Financial channel on YouTube, as well as the EWO channel on YouTube as well. So we can see that there's still two, believe it or not, stocks that are, and this is going to be interesting, Merck, that are in impulse moves to the upside, even with today's downward move. And Merck, obviously, in the defensive sector, the drug sector. So when we take a look at these, well, let me leave the DMI on there. I'll take these other ones off because I want to show you that. And we take a look here. That's a pretty darn good looking DMI. And the positive ADX, the positive directional indicator still moving higher, as well as the ADX moving higher, not out of the area of strength yet to overbought. Still plenty of room to go there. And as you can see in the Elliott Wave pattern, in a clear wave 3 might be a good place to hide. So if we're looking for something long, we could do a whole lot worse than Merck. All the defensive names are, Pepsi, the ones that you expect to do well. McDonald's was talking about, and if we take a look at the chart of McDonald's, just to move off here for a second, they're talking about how, hey, things have been great, but this is me wondering, why this bar is today, but they may start to get affected by the inflationary pressure. Seems like they would have already, but that's what they said. But McDonald's, those are the places we've talked about this before, the defensive stocks, Pepsi, Coke, the drug sector. We used to talk about the SEN stocks all the time, alcohol, tobacco, and gambling. The view was that no matter what's going on in the economy or the markets, we're going to find a way to take advantage of our vices, drinking, smoking, and gambling. Were defensive sectors as well, places that you want to look. And if the consumer is going to be tightening their belt, another thing that came out of the survey, if you look behind the scenes, and the confidence board gives you a lot of detail on the survey, not just the headline number. And a lot of people said they weren't going on summer vacations this year. It's going to be a staycation summer. So you're seeing the consumer start to tighten their belt already from the effects of inflation. So, maybe the grocery bill is going to change. Maybe going out to eat is going to change. And places like McDonald's and some of the fast foods, that dollar menu might become appealing to more people in an environment like this. So these are places that you want to look for if indeed the market is rolling over. And again, we have to have the follow through day tomorrow. And all this negative stuff could change, as I said at the beginning, based on what happens tomorrow. But these are things to look for, because we won't be talking to you again for another week unless you are one of our alert subscribers, and Thursday will be a very important update to see what happens, both tomorrow's trade and Thursday's trade. So just some things to think about, but I do like the idea of Merck. Chart's pretty interesting, breaking above all this resistance right through here and getting some separation here from the 30-day moving average. all that looks pretty good, and looks like we're, it's not a big move, but we're at 116 now, and about 121 or so is where the target price is, but might be a good place to hide if you're looking for something on the defensive area. Let's see what the other chart look like, ENSG, and these searches came from the search results came from my searches, because if you're an alert subscriber with EWO Trader and you have Profit Source, you get my searches too. So our subscribers can look at the same thing I'm looking at each and every day, which I think is pretty nice. So look at this one. Not as familiar with this company, but when you take a look at the chart, that's a pretty impressive day today, not just because it had an up day in a pretty ugly tape, but because it's holding the 10-day moving average. It tapped it on the low and it closed above 100, which is important. Now, if we take a look at the DMI here, it's a slightly different story than the one that we had on Merck. So if we take all the other stuff off, you can see that we're still underneath the positive directional indicator, but barely. But it's at 35, so it's a little higher. It's getting towards that area where you might say, hey, it's starting to show we're overbought. When the ADX goes above 40, that's when you start to pause a little bit. Doesn't mean that the end of the move is over, but it means that that's a time to start thinking about, hey, maybe I want to consider taking some profits at some point when the ADX moves above 40. The indicator that the move is over is when the ADX curls back down from being above 40 and crosses back below 40. That's telling you the move is completely over. So if you're a fan of, hey, I don't have to hit the bottoms or the tops, I just want to take a chunk out of the middle, and you see the ADX, reaching 40, might be a good time to go ahead and take a position off then, rather than wait for the reversal when the ADX moves lower. Even if you miss a little bit of a move to the upside, at least you caught it when it was moving higher. And the way option price has been moving around, gosh, if a day goes the other way, they really take premium out of whichever direction you are. If you're to the upside and you're buying calls and you have a down day, sucks the premium out of the calls, and vice versa. And then you got to wait for it to turn around and come back up. It seems like for a couple days before you get that premium back. So it's pretty wild. That's why spreads, I think, are really attractive right now. But anyway, so I think this is pretty attractive as well. And let's see what the options look like here, because I'm not so familiar with this one. ENSG. And we'll look at options and see what the options chains look like on ENSG. McDonald's, we know that's going to have a million of them. So let's see what Ensign Group and yeah, enormously wide spreads. So this is, take this one off the list. The spreads are way too wide. They're a mile wide. So unless those were to really come back in at the when the market's actually trading. Reason I say that is when you have, especially when you have down markets, and this really happens when you have down markets, when the market closes right before the close, they widen the spreads, and that's for the market makers to protect themselves, because they don't know if we might have a huge down opening the next day, and they're caught offside. So spreads widen after the hours, and then when the market opens, okay, it's a normal day, we don't have anything wild happening, and the spreads tighten back in. It could be that, but didn't look like there was a tremendous number of options and the spreads look wide. So we're just going to take that off. I think we're going to come back and take a look at Merck here and look at that as our case study consideration for this week. Well, that's McDonald's. Merck, this trade right here, moving up to about 120. And again, I do think it's a pretty good defensive play. And so you look at this and you say, all right, if we're looking at a zigzag here, where does the zigzag start? So we're doing a lot of technical stuff. So when I look at this, here's the things that I look at. Could you start it down here at the 2? You could, but you also had a descending triangle right here. And you can see that the stock broke out here, came back down and tested the breakout. And to me, this is where the impulse move started, right there. So there's the impulse, the beginning of the wave A, and we only had a 31% corrective move, so not much of a corrective move. But look where the 61.8% level is, right in the wave 5 box. So two different patterns, two different Elliott Wave patterns, along with a fib level, giving us roughly the exact same target, right around 120. So with all that considered, I think that we'll let Mark be our case study consideration to the upside. If the market does right itself on the back of the earnings, what you wonder about tomorrow is, does the market open higher because of these earnings and then reverse intraday? So just what happens at the open isn't going to be meaningful. We're up roughly 20 points on the futures as we looked at right now. That could all be gone by the time the market opens tomorrow. It does concern you a little bit. I think that Google gave back such a big part of their move after hours, but on the other hand, Microsoft held theirs, Amazon held theirs, Amazon's got their own earnings, and Chipotle held theirs as well. And Chipotle is technically fast food too. It's healthy fast food, bit more expensive than McDonald's, but still fast food. And so that could be an interesting place to consider hiding as well. But it's such a massive move now, I don't think you're going to want to chase that. I believe that will likely hold the majority of that move after hours. So all right, so MRK up to 120 is going to be our case study consideration for this week's TradeFinder. And with that, Zach, couple extra minutes for Q&A.
Awesome. That sounds great. Thanks for the presentation. Excuse me, as always, Rob. And there's a few comments coming in on MRK. William says my chart's showing a big down move to 114.99 after hours. And Sean says to check MRK after hours today. I'm seeing 116.53 from my end. So
all right, well, let me take a look. After hours and 114.19 that's just at 115, so that's only a dollar move. It may look bigger on the chart, but that's not necessarily a big move lower. Did they have earnings too? There is a bar. I think that's an aberration. I see what people are seeing there, but it's only one bar. So I think that's a pricing correction. Sometimes that happens, that they correct prices after hours. And so it gives the after hours price an oddity. But when you look at the chart, it's just the one single bar. So I do think, maybe it does move down tomorrow, but I don't think that's a legit price. I think that's a pricing correction that occurred. And so I'm still okay with that, even if it does go down to 115. That's support. That would be a place that we would want it to hold right in this area, because that was the high back in January before it dropped down and seesawed around. So it is a tiny bit overbought here from the 10-day moving average, and the 10-day moving average happens to be right at 115. So I guess what I'm trying to say is a move down to 115 wouldn't scare me out of this at all, not with that being the high from January and the fact that the 10-day moving average is here and we're a tiny bit overbought, a little bit of pullback. I mean, you might get a better price at the open, because remember, we're not putting the position on right now. It would have to be with whatever's happening tomorrow, and that's worked out well for us on some other trade finder case studies that we got better prices the next day, and worked out really well. So valid point, but the way I look at that chart with just one bar showing that, I think that's a pricing fix from the exchange rather than a legit move to the downside. But we'll find out tomorrow. So I'll still say that at 115 or above, still okay. If it trades below 115, then perhaps we hold off, because it could move back down here to 112, which is the top of that wave one, and also where there's a bunch of support. Just had that one little big vertical move, and I don't like vertical moves, so there you go, vertical move up and then right back down into this consolidation area. So if it can't hold 115, that's a very viable move down to 112. We wouldn't want to wait that far. But anything around 115 or higher. So let's put that caveat on there just in case, that this is contingent on being above 115 tomorrow.
All righty.
And make a
Sounds
number
like a
here.
plan. Yeah, it looks like MRK has earnings on the 27th which is the same as Amazon. So Thursday should be an interesting. Insiders have lots to discuss there.
Yeah, there's the earnings report there. So, and, you know, a lot of people look at this and say, aren't you afraid of getting in front of earnings? And that's a really valid question. And some people I know would rather wait. My experience has been more often than not, nothing's 100%, nothing works every time. But more often than not, when you have a really strong qualified Elliott Wave pattern, when the earnings comes out, it moves the stock the direction that the pattern was already showing. As I said, nothing's 100%, but my experience has been more often. So I guess what I'm trying to say is the earnings report doesn't scare me. But if, you know, when we talk about these positions a lot, and I usually try to give, you know, some commentary on if you're aggressive minded or if you're more conservative minded. We're all different. We all have our own comfort levels in how we trade, and, you know, different levels of accounts and things along those lines. So perhaps you look at this as being a bit aggressive, even with a hold above 115 with the earnings report so close. I wouldn't argue with you. It's probably aggressive to do that. I still trust it. But if you're more conservative minded, let the earnings report come out, see what happens. Obviously, if it's a good earnings report, then you risk missing some of this move. But that's what trading is, right? It's risk to reward. So you have to decide for yourself what you're comfortable with along those lines. So yeah, it's good. Good on our viewers for pointing that out. We'll see. Again, I'm not worried about that price, but we'll see how the earnings report plays out. But those are my thoughts on the upcoming earnings.
All righty. So we got a question here from YouTube on UNG.
Yeah, you know, it's a little cold snap here again. I was wondering, well, would that put a bid under UNG? And it hasn't. So this is it. I mean, 7 is, it's got a hold here, and you would think that with the amount of sidewaysness that we've had here, that we've based quite a bit. And if we look at the DMI, you can say, well, gosh, it might not be done. The ADX hasn't even broken below 20 yet. Even with all this sideways stuff, the ADX hasn't gone below 20. So it doesn't necessarily mean that we're ready to blast off here. Our longtime viewers know that we kind of talk about this as the launchpad effect. When something consolidates sideways, oftentimes it blasts off of that. But with the ADX that high, you know, it could blast off, but it could also go sideways for a while longer. And, you know, some sort of a sideways trade, I think we talked about last week, might make sense here. Some sort of a butterfly. You have clear resistance there at 9, and other than just this little blip here to 10, but that was short-lived. And then you got support at 6, so something like or a 7, so something like a 6-9 butterfly might make sense with the middle stuff going on right here. So yeah, I was disappointed to see no bid come into UNG today, but that's the way it looks right now, kind of sideways until it finally shows us that it can break out. So I think a calendar, a butterfly, something along those lines, at least for the short term, makes sense. Keep an eye on that ADX. Now, when the ADX goes below 15, that's a different story. Then at any point, it could start to make a directional move. But for now, it could go sideways a little longer. Hard as that is to believe.
Thanks, Rob. As usual, we have tons of great questions and only so much time in this session. So if we don't get to your question, just please know it has nothing to do with the validity. We just only have so much time in this session. And also take that as encouragement to attend the insiders meeting, which takes place every Thursday at the same time, 9 p.m. Eastern time, but it's for paid subscribers only. And there's a 45-minute Q&A session there. So obviously a very high likelihood getting your question addressed in that session. All right, Rob, you were correct about the Q&A, and gold is definitely in demand. So.
I can imagine. I'm saving your stock to see if somebody's going to ask about it, because I think I said earlier that Google's going after Amazon. They are in the cloud space, but they're also going after NVIDIA. So if somebody wants to ask about that, I was wondering how that might affect NVIDIA's trade tomorrow. So they mentioned them by name on the AI space. So pretty interesting stuff there. Is that going to be what finally halts the upward move to NVIDIA? But anyway, I'm sure somebody's going to ask about it now. Looking at gold, it does look pretty constructive, doesn't it? Even though it wasn't a big update today, it was up. And I think that what we wait and see, with the dollar, if the dollar does get stronger, the metals can still go higher, but that's going to be because the market's selling off, and it's another one of those flight to safety things. So I think gold looks really attractive above 185. As long as it stays above 185, I think you take a shot at going long on GLD, and 180 is support. If it were to break below 185, you got support there at 180 from the sideways move here that happened in January. So you've got a chance that it holds not too far below here if it breaks below it. But it came down, hit the 30-day moving average. I don't really look at the 30-day moving average as support resistance much. It's the 1030 crosses that I'm looking for, and that was something that some ex-market makers told me that the floor traders look for, and so that's why I added it into my system, and in that part of our technical analysis package that we look at, in addition to Elliott Wave, the DMI, CCI, and a couple other indicators that we all have come to know. But yeah, it looks pretty constructive on GLD, definitely above 185, looks like a long.
Very well. Thanks, Rob. And so it's a good segue into this next one from Jason. Would love to see a chart on ZIM. Looks of action away from the 10-day moving average. Rob's favorite.
Yeah, short term. I do like the 10-day moving average. And you can see there's an earnings report on the horizon there. And yeah, it's got some separation here, kind of a vertical move. And it's also, if it's going to hold, it's going to hold right here. Look at all this support. It's right there. So the fact that it is oversold, the viewer is correct. It's oversold from the 10-day moving average, and it had support here earlier in the month, and then a ton of support back in December and January, all at this level right here around, what is that, 18, 17, 18, right in that area. So again, an aggressive move would be to look for a bounce from this level again. A conservative move would be to wait, see if it holds here and can get back above the 10-day moving average. If it gets back above the 10-day moving average, back above 20, that's a more conservative long. So the aggressive one is take a shot now. Your stop is right here. So if you're looking for kind of a speculative trade from a risk to reward standpoint, then you could take a shot there. Now, if it breaks below this level, what is it, Zach? We haven't said it, I don't think, in a while.
Katie, bar the door.
It's Katie bar the door. If it can't hold here, who knows where it may go if it doesn't hold in this area. So I think, I know there's some institutions that are in this. It seems like they're probably going to want to try to hold this level, which is likely what occurred back here at the end of January and early February. So we're back down here again. Maybe they step in. We'll see what the volume looks like. If people bailing, it's just average volume moving lower, so it's not significant. It doesn't look like dumping of shares. This does, this gap down right here. And that's what happens. I've talked about this all the time, is when you get these big moves on massive volume, you get these huge spikes. Oftentimes it reverses, because when you see this and that big move, that's like everybody that wanted to sell sold. So you have a shortage of sellers, at least for a little while. And so stock bounced back to the upside, and now we're renewing the move lower. But yeah, that's a really interesting one. And I think I'll make a note of that and we'll update that next week, just out of curiosity, to see what happens, since that's such an important level that it's at right now. That was a good one.
Agreed. Next up, Ren would like to look at SQ.
Yeah, me too. Good old block. And not a nice day today, but also nearing an area of, support. You can see this level right here at 60. And if it doesn't hold there, it's 55. That's what's coming next. if it doesn't hold 60, because there's nothing to stop it. What's the volume look like here? It wasn't even average volume on this downward move. So maybe it can hold 60. Now, this is one where I've been talking about, risk to reward, if you wanted to take a speculative shot or wait or whatever. This one, I think, looking at it with the fact that it actually traded above the 10-day moving average earlier in the trading day, it closed lower, closed near the low. I would want to wait on this one, on this earnings report, and see there's no Elliott Wave pattern here. There's a zigzag, but it looks complete already. And so I don't have the same feeling on this one that I have on Mark. Yeah, see, we've already passed the 100% extension, and it touched the 161.8 already. So this zigzag is done, it's completed. It even went to the extended level. So there's no current Elliott Wave pattern whatsoever, not even a corrective pattern on this one yet. So this is a different story. We're getting a good mixture here. So good questions, good choices on your pick, Zach. But this one I would wait and see how we handle 60 in the earnings report before I made a decision on that one.
Yep, agreed. And I'm kind of throwing you all over through different sectors, but this
is great.
So we'll go over to VLO for a downside trade from Michael.
Okay. Yeah, makes sense with the energy sector has been getting shellacked. Now we do have an earnings report really soon coming up, 27th as well. There you go, Zach. Another Thursday earnings report. Thursday is going to be a massive day, it looks like, on earnings. Now the issue here for the downside for Michael is the fact that we got pretty good separation from the 10-day moving average already. And, prices I don't think are really as supportive as they once were. And the fact that it's breaking down like that, I think there is a downside trade probably on the horizon. And this is, gosh, do you want to get in front of that earnings report with such separation? That's the key here. It's way below the 10-day moving average. It's up at 125 and we close at 117. So it's 8 points below the 10-day moving average. It's way oversold already. It's at an area of support. I really feel probably right on a downside trade here. But I think if you wait, you can probably get a better entry. We might get a little bit of a bounce here, some sort of a movement back towards the 10-day moving average, even if it's only 4 or 5 points and not the whole 8 points. Just seems like this one's so overdone, it would be hard to go short now. And of course, it'll probably be down 10 points tomorrow after I said that. But for me watching this one, I do like the idea of a short. I think there's a great chance that this is going to come down into this area here around 105 where it was last summer. I think that makes sense, especially when you're hearing, people not going on vacation this summer, stuff like that. But it's a hard short entry for me right now because it's 8 points below the 10-day moving average and it's at an area of support. So I just feel like maybe we get a little better entry if we wait a couple days. But other than that, yeah, I think longer term, that's a good looking short.
Awesome. Thanks, Rob. And I see we're right at time. So how about 3 more symbols for you this evening? We'll call it a night.
Okay.
All right. So this one here is from Jordan. Thank you for all you do. Can we please look at Mara, M-A-R-A?
Certainly. Marathon Digital. So also hit earnings report. Don't be the 27th again, though. No, this is May 7th. But this one is also at a ton of support. So if the person is long here, if it's going to hold, this is where it's going to hold. You do have a nice set of higher lows there from the pattern. There's the vertical move. You see it over and over again. This is why it's one of my rules. They're calling them Robisms now. I just don't like vertical moves because that's what happens so often. You get a vertical move to the upside, it comes vertically back down. Those are good times to take profits, like over here, same thing, over here, same thing. So this stock does this, and every time it's been retraced, it looks like. However, with all that said, it does have support right here at 9, and it has made a nice set of higher lows. It's got a good qualified 5-wave pattern, so perhaps it got that little run out of its system and is regrouping and maybe setting itself up to move back to the upside from here. But a break below 9, and yeah, there's some support at 8. But when you come back over here and see what happened the last time it broke 9, all the way down to what's that, 3. So that would really concern me. So break below 9, and I think that's a no-go, or maybe even potentially a short. It could bounce around 8 for a little bit, but if it doesn't hold here, I would get nervous about that one.
Very well. Thanks, Rob. And so for the last two final symbols for this evening in session, we're going to go over to our friend Will, who would like to look at PANW. And I'll let you guess what the last symbol is.
I wouldn't be in video, would it? Yeah, that one's going to be wild to watch tomorrow when they getting called out by name after hours. This is a little surprising to me to see today's downward move there on Palo Alto. It's been one that I used to trade this one a lot years ago, and it was a fun one to trade because it moved like crazy. So we're at an area here at 180 that I think is important for it to hold. The good news, if you're long, is that you set up a wave 4 just above the 38.2% fib level. You are separated from the 10-day moving average, so it's oversold right now. So it's oversold. It's at a potential area of support, and we're close to a pretty good fib level at 38.2. So if it's going to bounce, it should bounce soon. But if it doesn't, there's nothing there. I mean, I know it's hard to imagine, but if it can't hold 180, I think there's a pretty good likelihood that it marches back down towards 140, not overnight, but you can see this move from 140 to above 180 was just a strong move. So it moved above resistance, it consolidated it, it took off again, and then something's happened over the past week on this move back to the downside here. So perhaps it's just the wave 3 ended and is creating the wave 4, and no harm, no foul, and we're ready to turn and move back to the upside. That earnings report is on May 17th. So we'll see how that factors into the mix. I'd have to check the news to see what happened today. That's a little bit of a surprise, that bar to me. Average volume, so it wasn't weak volume, but it wasn't massive either. Perhaps just moving down with all the tech stocks today, who knows? But yeah, it's got to hold 180 to stay long, I think. So is it NVIDIA? Is that the last one?
Oh yeah, save the best for last, as you know.
All right. Well, I don't know that looking at today is going to make much of a difference because tomorrow is going to be really interesting to see how it maybe doesn't affect it at all. Maybe they're like, all right, they're coming after us because we're the best. So it's still in this range. Nothing has changed over the past few weeks with NVIDIA. This big March is being nicely consolidated, but it's still the here we go with the Led Zeppelin song remains the same again, 260 to 280. I still feel the same way here, that if it breaks above 280, I think it's a long. If it breaks below 260, you could have a quick short, at least down to 240, because there's some support there at 240. If it can't hold that, then it gets really interesting to the downside, but it certainly had a heck of a run. So in the same trading range, 260 to 280. And maybe we break that range tomorrow, one way or the other. That's going to be really wild to see. Its earnings report is not until the 24th of May. So it's a while before that earnings report comes out. It's expected to be good, but see, NVIDIA trades with a very high multiple. So they're going to have a good number because of that to justify that multiple. But same trading range, 260 to 280. Last check of the futures moved around a little bit throughout this hour, but still at 19.5. Few points up, few points lower, but futures up 19.5 right now. Can that hold to the open? What happens tomorrow? Going to be wild to see what happens tomorrow. Thanks everybody for joining us tonight. Hope you have a wonderful rest of your evening. We do appreciate you spending your valuable time with us. Time's the most valuable asset we all have, and hope you enjoyed this session. I thought it was a good one. Great questions. Good job.